Hello friends, welcome to Pro Trading Zone. So today we are going to look at the chart patterns, the candlestick patterns that has formed in the past week, that is from the 1st April till the Thursday of latest expiry. So today we are going to look at each and every day individually, look at how a directional trader would have taken up a trade and what would be the important points for a zone trader. So each day we took a trade and we made good profit. What decision that related to the profit is also described in here and exactly tells you how zone trading works, how a directional trader should think about it, and how a directional trader could use zone trading to make good money in directional moves. So in zone trading we do not take a trade until unless the market is in our zone, that is we choose two important pivot points. If anything happens between that zone, we do not take a trade over there and let market play itself out. So today we are going to see each and every scenario for each and every day, and we will see each and every possibility over there that made it happen. So let's go for the first day, that is the April 1st. So on the April 1st I took a trade around 10 o'clock because I found that two important pivot points, that was 36,875 and 36,610. It was in between it, and I was in the notion that it should be between these two pivot points so that I could make good money. So this was my trading setup for the day, but what made me understand that market could go up today? So one of the prominent thing that we look is the first two candle in the 3 minutes of the session. That is, if the market opens either up or down, you have to see if market has made a upper side move and there was a candle forming over there, and the second candle is crossing it and making a candle above it only. If it doesn't go below 50% of it and only makes a candle above it, we consider that day to be sideways or it is going up. This is our general assumption for it. So when we consider this kind of pattern, it is important that you do not you do not consider that one confirmation as a total confirmation for the day. Market goes up and down every day. Anytime it can go 1,000 points up and 1,000 points down. So you have to be alert about it. But this setup could have made a good understanding for us that today is a bullish day or a sideways day. So if you would have considered one thing out of it, you take a trade only when you see a good setup out of it. So if you are a directional trader but you follow our zone trading technique or zone trading strategy, then you wouldn't have taken any trade in this zone. You could see there is a resistance over here, then again there was a resistance, and then later once our pivot point was breached, it gave you a good big candles of green totally. One, two, three, four, five, six green candles in totality. So this is the strength of a zone trader, that he knows where to take a trade and where not to take the trade. Even though you could see so many setups available over here throughout the day, but when you see that market is not created any of these candles in the day, you would be skeptic what to do. Or if you would have seen over here there is some price action in this portion, you would be skeptic if market could go up or market could go down. So in that condition, you should be aware that which are the important pivot points. So for our consideration, the important pivot points were 36,943, 36,875, 36,610, 36,411, and for below the days open, that was 36,273 and 36,106. So these were important pivot points which told us that market could be working out some price action around themselves, and as you can see they have turned out to be very important for us. Just to take into consideration, keeping aside the zone trading, if you would have considered this to be a good move and you would have seen these three candles, even though you would consider this to be a pattern in the candlestick consideration, but once it is happening in the live market, you wouldn't have considered it to be a pattern. You would have considered that market will go down now. This is the only psychology that works, and you couldn't have drawn any of the important pivot points or levels over here. The next level that was close to it was only this. So you would have seen a fall until this point. So most of the traders would have exited over here itself after seeing 2 3 red candles. This is not the fault of the trader. A trader needs something to rely on, to look forward to while taking a trade. He needs some confirmation that trade is going right. Same way over here, you could see, if I consider this pattern as a good one and it just broke over here, it started coming down again it would be problem for an option buyer. For an option seller who would have sold it over here, he would have made money over here as well, over here as well, because of theta decay, right? But for an option buyer, this could have not been any good sign for him, because market went sideways. When market goes in a sideways and is in a smaller zone, that is between 2 points, between these 2 points, if I consider this to be important point and this to be important point, in a zone where it is going sideways, market could dramatically go upwards or downwards. So if the zone is broken on upside, a option buyer, that is a call buyer, would have made good money. A call no sorry a put buyer would have made good money when going down, but there was no confirmation whomsoever have taken trade over here. So this could have created a nuisance. While what to do this in this phase, because you are continuously losing theta when you buy either put or call, but an option seller would have been gaining money over here. So when I took my trade around 10 o'clock over here, I was sitting up till here. Once this important pivot point was properly breached, I exited. So I have taken a short strangle and short straddle with call short and put short positions. So I would have exited my call short position and let my put short position run at least here until it is green. And when I saw a red candle over here, immediately I would have exited and would make good money. And this is what we did in our trade. And for me, if I would have taken as a directional trader, I would have seen this market, I would have seen this is a important zone where between this, I would have seen this level and this level as an important zone. Market is going sideways. Once it breached my pivot point, and the only trade I would have taken was for upside, not for downside, because I wouldn't have considered it to be a good trade, because there was no important pivot point on the downside immediately. For me, the only setup that was available was that market breaches on the upper side and makes a good run. So this is the importance of pivot lines in a zone trading and a directional move. You could consider this zone to be nothing, or these pivot lines to be nothing. You would have taken a trade on the downside, but your probability of making a loss would have been very higher. We take trade only in the pivot lines like this is because we want to minimize our false breakout, our trade in something where the market shows strength and immediately turns around. So these pivot lines prevent those kind of bad notion towards us. So if you would have taken a trade over here, you would have considerably made good money until at least till here. So if I would have taken a directional trade, I would have entered here, made good money, would have waited to it to come down till here to exit my trade, but I would have comfortably exited my trade here itself, because we do not put in ourselves in the grid. You would have made good money of at least 200-300 points over here. Or if you have been buying call or put, you would if you would have been buying only call, you would have made at least 100 points over there. So 100 points are okay when there is a short span with less volatility, with less understanding about what market will do next or finding out what market is doing this next. You only keep an eye what market is telling you right now. You take your profit and you exit the market. You do not wait for uncertainty to set up in the market and you have to decide if market goes up and down. You only take setup in a directional trading when you know it will go up or when you know it will go down. Uncertainty for a buyer is very bad, and that uncertainty is the primary reason why traders hold their short position or a long position in a directional fashion when they are taking a strategy or a setup and lose enormous amount of money just because they think that market would be turning around and going up because there is uncertainty in the market. There is no proper cue if market would be going down or going up. So the only trade was from here for us, from here till here in the market. And if you would consider this chart pattern with this indicator, the indicator that I am using right now is VWAP with one standard deviation in it. So just to show you, so this is only one standard deviation, that is multiplier of 1 in VWAP. So if I put it in this fashion, I get a basic understanding if market is in the longer set or it is going on the downside. So whenever market comes to VWAP, you know it jumps up from here again. But when it is in a bullish run, it tries to be closer to the green line. So according to zone trading, we would have entered here, exited here. But if you would have considered this green line as your trend line, you wouldn't have exited till the day's end. This would have been clean profit of more than 370 points. Clean 370 points of win because it didn't touch the green part of the VWAP standard deviation of 1. So this is how you trade with simple setups. So this simple setup would have given you good money. Over here, throughout the day, it was not very clear. But once you would have taken the use of your pivot point, good breakout, and the use of the standard deviation 1 green line, you would have made a good profit. This is how you should trade. Not depending on what you think, but what market shows you on the candlestick and what market shows you on the directional day. So this was for April 1. Now let's move for next trading session, that was Monday, April 4th. So I took a trade over here and I exited my one of the position as we have taken a strategy of short straddle and short strangle. And once market breached our important pivot point over here, I exited my put short position and let my call short position run at least till here. So on April 4th, the next day, on the Monday, market still jumped really high from the yesterday's close. It was approximately 37,250. It opened approximately 37,846. So it was a 600 point opening difference. Market came down in the first candle, but you could see one of our setup is that if the first candle doesn't breach the 50%, sorry, the second candle doesn't breach the 50% of the first candle, it is kind of a bullish day or it is on the sideways day. This is not a proper setup, but this gives me an understanding what market could do in that day. So once market started moving in the upper direction, we do not take a trade until and unless we find that there is a good price action over there or something that makes sense to you. Even though you can see so many pivot points, this was not considered by me on the start of the day because there was no proper setup for me. This is very important for a zone trader to understand that when a good proper setup is found, then only you take a trade. For me, I saw this could be a good starting point to take a trade, but I knew market could run in the first session, that was before 10:30, so I didn't take a trade. But once again when it started forming a price action over here, I took a trade over here with considering pivot points of 38,980, 38,792, 797, 38,692, 38,516, 38,394, 38,194. So this all these pivot points were important for me on the upper direction also. But the thing to understand over here is that once I took trade over and it started moving directionally, even though it started moving directionally, we made a good profit that day. And you can see this in my shorts, live shorts that I put every day in the live trading session. So I exited my trade here, that is of my put short. As we take short straddle and short strangle strategy, I would have exited my call. I would have kept my call short position running and exited my put short position as market was coming down. Then once this important point have breached, I would have exited my call short position as well and would have cleaned my slate of the market and exited it with a good profit. Once I exit my market with a good profit, I do not take a trade again in the market. Even though I watch for a good setup, but I try not to take a trade. For a zone trader, for me, making a good profit and staying out of market and looking for a good setup for tomorrow is a more idealistic way to be consistently profit rather than taking multiple trades per day. But when I find there is a good trade in the day or there is a good setup, I do try to take a trade. So the chart pattern over here first was that the starting candle and the second candle, these both are 3-minute candle. So first candle was formed, it was above the yesterday's opening. Even though it was red, it opened up above the yesterday's close. The second candle of the day didn't breach the 50% of the first candle and it started going up. So it was a good trade for us, only consider this setup, but I do not believe to take a trade in this, because in zone trading or in considering only zone trading rule, I make a good money. I do not try multiple setup, but this give me an understanding how to trade. Now once market made a bridge over and started coming down, for me it could have been a nice turnaround and coming down, but we wouldn't have considered any of this to be a good trade because there was no proper candle telling you that market is going down. Even though this could have been considered as a higher higher pattern or something that is the ceiling for it or a strong resistance zone, this would have been considered downfall. I could have just drawn a pivot line like this, that it is creating lower low, but it was a too steep of a line to consider that market is going down right now. A trader who makes a directional trade has to consider that this is a trade that is going down and it should take a trade, but I wouldn't have recommended it directly because there wasn't enough price action over here which suggested that it will go continuously down. And as my bias was that market would be on the sideways or I would have taken a trade over here, I would have messed it up. But for a directional trader, this could be a resistance zone and market is coming down, but with not that much of certainty from my side. But once it breached again and came into this zone where the price action has already been shown to the sideways, you will find whenever there is a sideways price action, you will find market tends to do another sideways price action in that area. Exactly the same thing happened over here and exactly the same thing happened in the other sessions of this weekly expiry. So one of the good patterns that I found over here was this W pattern. This W pattern, and it could, whenever I see a W pattern in the market which is formed with at least an hours time frame, minimum hours time frame, you could see it was made in at least 1 hour to completely make a W pattern, and there is a proper high and proper low. Even though this would have been a crooked W, it is okay. If it would have been in this fashion also, it would have been okay, but the target or the trigger for taking a long directional trade on the upper side would have only initiated once it breached important pivot point of 38,394. It went sideways and then went up till the day's high, but it went on the day's high. A call buyer would have been jittery over the period over here, but a put seller would have been celebrating it, but it would have created very close calls on these 2 points. A market trader who knows that the risk is involved, either it goes on upside, on the sideways, on the downside, is the one who can make money in the market. For that, you have to know exactly how option Greeks are working in your trade. To learn about option Greek, you should search on my channel Option Greeks by Pro Trading Zone. It will exactly tell you why I believe certain patterns would be working wondrously and why there are certain patterns I avoid to take a trade on. So this was a important pattern over here. Even though you see there is a pivot point over here, but there was no confirmation on my trading views that would have told you that market would go on upside or downside. But this trading point or this pivot point would have give you an understanding that market is going up. If you do not find a good pivot point over there and you are using one standard deviation VWAP, you could consider this green line breaching as a point where you make good money. Similarly, over here you could see there was going up and up, went sideways, touched over here and went up again. So this was a good idea that market will be going on the upside. So this was for the 4th April. Now let's move on to the 5th April. What happened on the 5th April and what were the important points that I considered. I would have not exited over here, but exited here once I saw a big green candle. This was a discretionary decision from my side because of my experience that if immediately the next candle shows red and coming down to the pivot points, you have to consider give a lean way for strategy to work. I exited here my call short position and later I exited my put short position over here, because once the market gives me a good amount of money or hits another pivot point of mine, I exit my trade. I don't want to be greedy to make too much of money in one day or lose too much of money on one day trading itself. So this was my trade for the day. But if you could consider again our rule that the first candle makes a big candle, the 50% mark was not breached and the smaller the candle was formed below it, it was a downwards day for at least that point of time. It is not a perfect strategy, but it works most of the time. For me, there was nothing much for the first half of the day, but just to make a consideration that there was a pattern forming over here, you could see this was a U cup and handle pattern forming over here, and this was the point. This was the point which would have activated the cup and handle, but you could see this is a red candle over here, and red candle could create a problem in your psychology that market will not give you the output that you are expecting on that day. So this is why directional trading is kind of a messy for someone who has not understood much about the market, that market doesn't go linearly on the straight upwards or downwards, and the stop loss would have been approximately over here, that is 40 to 60 points, because market easily moves 40 points in the market. To 40 to 60 points is a good points that would have been considered for keeping a stop loss. So once it would have hit over here and showed a red candle, I would have exited over here if I would have been a directional trader. If not, if you do not consider this to be a cup and handle, this was a W pattern, crooked W pattern. Again it came down, it would have cut my W pattern formation profitability, because as soon as it showed a red candle over here, I would have exited my trade if I would have been a directional trader, and zone trading wasn't considered by me, and it went in a channel. So for us, a channel is a very important part of trading. So once I saw that market was playing around here, I would have definitely entered around here second time and would have ride all this portion. So in zone trading, I would have considered 38,516 and 38,194 as an important pivot point. On upside, if would have breached over here, I would have exited my call short position, because we have put in put short and uh, call short positions of short straddle and short strangle, and let my put short position run at least till here. Once red candle would have formed, I would have exited. This is the power of zone trading. You get a clean move over there most of the time, not every time, most of the time you get a clean move over here. If I would have hold, I would have definitely exited over here and made good money out of it. So first trade was from here approximately till here, and exited, booked my profit here. Second trade would have been approximately here, then exited my call short position here and booked my profit over here or here, whatever my appetite is on that point of time, or how I feel about the market at that point of time. Later here you can see a pattern forming and then coming down. So generally what I found in the market was there is a kind of a U pattern that is in the reverse. Whenever I find a U pattern that is coming on the reverse, I keep a threshold where it could go, or where it can go properly on the downside when there is a reverse U pattern and there is an activation. So this could have been my activation line of 38,516. So my generally the patterns forming and activation points are already fixed. So if a pattern is formed over here, my activation point wouldn't be this. This wouldn't have been my activation point. My activation point would be this itself, because that is my important pivot point, and a proper U pattern was formed until here like this, and you can see it consolidated in this zone and then gave you a good downwards pattern. So three patterns that I consider very important are W, W, M, U and reverse U, and then there is a pennant that is in this format. So these are the important patterns that I considered that will give you good money in a directional trade. Rest also give you a good money, but if you consider slanting triangle or everything, I put them into a zone like this, even though you could have considered this to be a slanting triangle over here, but for me the activation was not over here, my activation was here, and my for me the zone was total zone was this. This was my total zone, upper point, the middle point and the lower. Only activation was over here and activation was for here. This symmetrical triangle wouldn't downward slanting pattern wouldn't have made me much sense until and unless it would have breached over here. It removes so many wrong formats of trades when you take it by looking just at the pattern and just taking up trade. Every trade with the pattern has to be breached with some important pivot point, and activation has to be there, then only you should take when you're taking a directional trading. This is very important. There has to be a pattern, then there has to be an important pivot point to be breached, and activation happening over there, then only you should take a trade. It is okay to lose few points over here by taking trade over here, but not to take a trade when there is no activation is very important. Another trend line I would have considered was this pattern going up. Until here I would have considered higher high has been forming, the market is in the upper trend. This would have been consideration for a long trade in the market, but generally horizontal lines are considered by me to be very strong for telling you what market exactly wants to do. Diagonal lines or diagonal trade lines are generally considered to be less powerful than horizontal. So on the 6th, the market came down. Yesterday market came down. Again the market opened on the lower side, and you can see the 50% mark of the trade, 50% mark of the candle. It was closely bridged by the next candle. So even though I would have considered it is a long day, I wouldn't have considered it to be a very strong signal to go long, or day would have been on the longer side. So there was two possibility for today, either it could go up or will go on the sideways. So this setup generally gives you money, but I wouldn't recommend it very profoundly. Now let's go for the deeper study. So I took a trade in the market approximately at 10 o'clock over here, and then market created a W pattern. I exited my trade over here of put short. So I took my position over here, that is short straddle and short strangle. I shorted call short and put short, let it run around the market, and then I considered few of the pivot points that were 37,993, 37,958, 37,850, 37,741, 37,542. But as soon as it breached this important pivot point with a clear green candle that was very bullish, I exited my call short position and let my put short position run until unless it breached another pivot point over here. I exited and booked my profit over here. So I ate the theta decay, and I also booked profit of this movement. So I was making profit of non-directional and as well as directional move. So this is the power of zone trading. So one of the things that I predicted that day and put in my shorts live was this W pattern. This W pattern was formed and the activation was only over here. Even though it came down, I would have a directional trader would have exited over here because it would have considered only this as an activation of the W pattern. But immediately it showed red candle, you would have exited the trade. But for a zone trader, you could see how promising it was that we drew a line, and from there itself it kicked off very hard to the upper side. But our activation of a directional trade was only over here when our pivot point was breached, and you can see no pivot point was breached again over here, and it gave you a good profit up till here. But for us, good profit was up till here, or next profit point was here. Or you could have waited for this candle to go up till here, and when it came down you would have exited on any of these positions. So you understand how important the pivot points are. Here you would have got a rejection and market could have come down, you would have exited your trade if you would have been a directional trader. But for a zone trader, the only activation was over here, and when it was activated you would have waited either to bridge down over here or breach this point to book profit, or this point around this zone to book profit. This is the power of zone trading with directional move. Later it made higher high over here. You could see one more trend line I could draw was this higher high pattern. This higher high pattern would have made me understand this is in a channel, or it is in the zone of going up. It would have breached this channel and market would have come down here, and activation of this position would have been activation of this trade would have initiated over here, but you would have seen loss for some time. So if we consider to be 50 60 point 40 to 60 point of loss, you would have hit a stop loss over here, but ultimately when it again came down over here and formed some pattern over here, you would have initiated your trade again. So you would have booked a loss and immediately took a trade again as per zone trading, and you would have made good money at least until here or here. So from again activation profit till one important pivot point, or you would have waited, you would have exited over here. So you could have taken trades anywhere over here when market was coming down, but here it was a green candle, so I would have avoided. So this was a good point to take a negative notion towards the market, and considering this line to be very important to take a trade. So if you knew this important pivot point, you would have taken multiple directional trades from here till here, from here till here in this zone. So this is what is important to understand. Not every trade is needed to be taken, and when you find a good zone or a trade positions or trade patterns, you take it again and again. So it was the second half of the day. Even though this was going sideways, or I would have considered this to be a crooked W pattern from here, I was reluctant to take it because it wasn't something I was very excited about, because the pattern was not that good. As you can see over here, a clean pattern gives you a good return, but when there is unclean pattern or something that doesn't make good sense, wouldn't make you money. The second thing that you would have considered over here was a handle and cup, but this doesn't make much sense. Generally what you want is a big cup and then a small handle, or generally it should be in a U fashion, and you would be making good money out of here. So this was for day 6. So on the day 7, it was again a day where we found that market has opened below, but the first candle that was formed, right here you can see the first candle was formed and the 50% wasn't breached, and the market second candle of 3 minute was above it properly. So it activated an understanding that market could go either up or market could go either sideways. So this was our notion for the day. So once it started going over here, I took a trade early in the morning as I saw it was in the zone. For not more than 1.5 hours I was in the market, and I exited as soon as I found that market is very sideways. And whenever the market is on a very small area, in very small area, you tend to find there are big moves suddenly. So as it was an option expiry, I didn't wanted to wait in the market for much long, as even the premium on that days were very low. So as soon as I made some money, I exited my trade. I took a trade over here, I exited my trade, and immediately I exited my trade in 1-2 candle. Market started going up. The important pivot points that I considered that day were 37,850, 37,741, 37,542, and on the lower side 37,389, 37,252. But it was for not more than 1 hour we stayed in the market, and then we exited it. So later whatever happens in the market was okay, but the risk reward ratio for taking a zone trader was not much worthy. So I exited it totally and didn't do much in the market. But for a directional trader who was okay to take a risk on the same expiry session, or he would have taken a trade for next expiry session, that was next week's expiry, he would have bought a good amount of call over here. There was a proper retracement over here, then was a good upper side movement in here. But for us, if we were zone traders, first target was this, the second target was this. I would have exited my trade over here, wouldn't have considered much of what good amount of money or this big candle would be forming. For us in the live market, you do not know what exactly is happening. And if you would be following the market properly, every minute of the market, you know that market goes up and market goes down suddenly in one candle, 300 points, 400, 500 points. So if I am making good money over here, I booked it and exited, it doesn't bother me if market would have given me more return. Market is paying me generously, I'm happy with it. If market would have been on the reverse, I would have been happy with it, because I've exited, I have booked my trade, I have calmed myself down that market is doing good. So this was the trade for the expiry date buying of call, or you would have shorted the call over here, shorted the put over here and made good money until unless it reaches over here. You would have easily made 40 points with this small 3 4 5 candles, as market is on expiry and the theta decay and delta was on your side. So once again market went over here in a zone that was 38,194 and 37,193. So there was double top forming over here. You could see there was a double top forming over here, but it didn't make proper M pattern. That is M pattern over here. There was a misconception of mine that this M pattern forming over here would have come down dramatically. That was also one of the reason why I exited my trade over here. So even though you do not make good understanding of trades on that day or do not see something very promising in the market, the zone trading helped me to exit the market in a profit, even though there was no much confirmation of the direction of the market. So just because we do not trade for greed or to make very huge money, I entered here, exited here, immediately it shot up. It would have messed up with my psychology and all the trades that I have taken. And there was no confirmation. This M pattern of mine was blasted by this green candle and this big candle. Still we made good money because we followed zone trading rules properly. So I would have taken a good trade over here and waited till this point have breached. This would have been second trade of mine for the next expiry, option expiry, that is of 14th. 14th April option expiry would have been sold by me in short Sutherland triangle, exited my trade of put short over here approximately, booked my profit here, but as it was a proper red candle, I would have waited and booked my profit over here. So I would have made good money amount of money over here. But as it was expiry, I was not bothered to make all the money in single day. I want good consistent return every day. But this was a proper legitimate good trading area to get into in the market. So second trade wouldn't have harmed, but I avoided my temptation. Later it went on the sideways and it was a sideways close of the market. Market didn't move much up or down. It was literally very flat. Yesterday's closing and today's closing was almost flat. So this was the chart patterns for today. So quickly round it up. First important point is that you take trade only when an important pivot point is breached. Second, you do not see the chart patterns in the market, what you visualize. You only trade what market is showing you, the chart patterns or the trades that marketing showing you. Only then you take a trade. Third, it is not a necessity that once you see a chart pattern and it has to follow through. These three important points needed to be understood by a directional trader as well as a zone trader. A zone trader is more secure because he doesn't take any trade in the zone by anticipating something is happening, but for a directional trader it is very important to understand these 3 points. So friends, if you liked my uh, if you liked my analysis, you liked my understanding of the chart patterns, if you liked the important pivot points I put in over here and how I use those same pivot points again and again throughout the week, and it made us good sense and made us good money, even though you would have considered that there are many more chart patterns forming over here, I totally agree with you, but you have to see if it is activated or it is making a good chart pattern according to the trade that you have taken. If you like my analysis, please like, share, subscribe, share with your friend. I would be delighted if you would share with a friend who is in the need. And if you would like to see the live analysis in the market, come in the market in the live session on my channel. You will see consistent trades that I put in the market about market analysis, shorts about the market analysis, what are the pivot points, what trades I am taking, when I am exiting, what is my view, what are the chart patterns forming, what is the book profit, how the market is going to be in the next session, everything. Please like, share and subscribe. So let's go. But this is thank you for today. Let's see you in the live trading session.